Hey everyone, and welcome to This Explainer. I am so glad you're joining me today. We're diving into a genuinely fascinating and super practical guide called The Architecture of Wealth, a beginner's guide to investing. Now, as we go through this material, I want you to think of me as your friendly mentor, or, your lead architect for the day. Together, we're going to walk step by step through the process of building a strong, secure financial house that will last you a lifetime. Let's get right into it.
But before we put on our hard hats, let's just be totally honest for a second. Does the whole idea of investing feel entirely overwhelming to you? Because if you're nodding your head right now, I want you to know you are completely normal. As a financial novice, looking at the investing world can seriously feel like trying to read a complex blueprint in a language you don't even speak. There's all this jargon, there are flashing numbers on the news, and it is completely valid to feel a little anxious about making a mistake with your hard-earned cash.
Well, I've got some absolutely fantastic news for you straight from our source material. Take a deep breath. It's simpler than you think. Seriously, that is the core promise we're exploring today. The guide emphasizes that getting started doesn't require a degree in finance or a background on Wall Street. It really just requires following a few basic, highly effective principles. So we're going to clear away all that confusing noise and focus purely on the straightforward steps to getting your money working for you.
All right, let's jump right into Section 1, the Blueprint for Wealth.
Now, every great structure starts with a plan, and when you're building wealth, the absolute most important first step on your architectural blueprint isn't actually about how much money you have right now. It's about when you start. And that brings us to the absolute magic of compound interest. As it's defined here, this is when small amounts invested regularly grow exponentially over time. Now, what's really interesting about this concept is that you aren't just earning interest on your initial money. You're actually earning interest on your interest. It's like a snowball rolling down a hill. Letting time do the heavy lifting transforms even the most modest, small contributions into serious wealth. You don't have to be rich to start. You just have to start and let time become your master builder.
Moving right along to Section 2, laying a strong foundation. Any architect will tell you that before you start framing up walls, you've got to pour a really solid foundation. In the financial world, storms are things like, a sudden car repair, an unexpected medical bill, or maybe a job loss. Our source guide stresses that to survive these kinds of storms, you need an emergency fund containing 3 to 6 months' worth of your living expenses. Why? Well, because if a financial storm hits, we want you to rely on this cash reserve. It keeps you from ever needing to pull money out of your investments at a bad time, allowing them to keep right on growing. Think of this as your ultimate financial shock absorber.
Next up is Section 3, capturing the free money.
Okay, with our foundation securely poured, we're moving up to the first floor to look at U.S. retirement accounts like IRAs and 401ks. And listen, if you only remember one single concept from this explainer today, let it be this. If your employer offers a 401k match, that is literally free money. Let me say that again. Do not miss out on this. If your company says they'll match your retirement contributions up to a certain percentage, you have got to take it. It is entirely free building material for your wealth. Leaving an employer match on the table is literally like walking past a stack of $100 bills on the sidewalk. Pick it up and put it in your house.
All right, on to Section 4, keeping investing simple.
Now, entering the stock market can definitely feel daunting, but remember, we're thinking like smart builders. A smart builder doesn't march into the forest, chop down trees, and craft every single 2x4 from scratch, right? Well, picking individual stocks is exactly like that. It's highly risky and super time-consuming. Instead, smart builders buy reliable, prefabricated materials. And this brilliantly illustrates what index funds and ETFs are. They track the overall market, like the S&P 500. So instead of betting all your money on one single company, you're buying a tiny, prepackaged slice of hundreds of top companies all at once. It spreads your risk way out and makes participating in the stock market incredibly easy and so much safer for beginners.
But hey, if even choosing an index fund sounds like too much work right now, our source guide offers another fantastic tool, robo-advisors. I know, robo-advisor sounds like some piece of complex sci-fi tech, but let's quickly demystify it. A robo-advisor is simply an online platform that automatically invests your money based on your personal financial goals and how comfortable you are with risk. You just answer a few simple questions, deposit your money, and the platform handles the whole shebang. It is a completely hands-off, highly beginner-friendly way to manage your brand new portfolio.
Now let's look at Section 5, weatherproofing your portfolio.
So, the stock market is absolutely guaranteed to have sunny days and rainy days. Unpredictable storms are just a given over a lifetime of investing. To protect all this hard work we've done, we need the financial equivalent of excellent insulation and a totally leak-proof roof. This is where diversification comes in.
It simply means you don't put all your money into one single asset. By holding a combination of stocks, bonds, and funds, you ensure that if one specific area of the market takes a hit, your entire financial house doesn't just come crumbling down. You aren't keeping all your eggs in one basket, which effectively and dramatically reduces your overall risk.
So how exactly do we maintain this beautiful house over time? Well, through a steady, reliable rhythm. The absolute best maintenance strategy highlighted in the text is dollar cost averaging. Now, this simply means you invest a set amount of money on a consistent schedule, say every single month, regardless of what the market is doing. The guide strictly advises avoiding the temptation to try and time the market or guess when stocks are at their absolute cheapest. By investing consistently, you naturally buy more when prices are low and less when prices are high, smoothly riding out all those inevitable market ups and downs.
As we step back to look at what we've built today, there's a quote from the source material that grounds us really beautifully. Investing isn't about getting rich overnight. It's about building wealth slowly and steadily. And honestly, that is the true nature of wealth architecture. We aren't throwing together some flimsy tent for a quick weekend trip here. We are building a permanent legacy, brick by brick, that's going to stand the test of time. It is a marathon, not a sprint.
Let's do a quick recap of our explainer today with the final blueprint. Here are your 3 incredibly simple, actionable takeaways. Number 1, start small. You absolutely do not need a fortune to begin investing. Number 2, stay consistent. Use that dollar cost averaging to keep steadily adding bricks to your house. And number 3, let time do the work. Remember that profound magic of compound interest we talked about? Time is your greatest, most reliable ally in this entire process.
All right, your blueprint is officially ready. You now know exactly how to lay a strong foundation, capture that free money, and weatherproof your investments using simple, reliable tools. So, as your friendly mentor, I want to leave you with this empowering question. What small step will you take today to lay your first brick? Maybe it's checking your employer's 401k match, maybe calculating a 3-month emergency fund, or just looking up a beginner-friendly index fund. Whatever it is, you have the knowledge to start building right now. Thanks so much for joining me on this explainer, and happy building!